3, 2, 1. Welcome to the jungle.
It is a jungle out there. There's no doubt about it. It has been one heck of a week for September.
I know. We've been talking about it all week.
Yeah. This is going to be a pretty good show because it's going to frustrate some people. And we talked about it yesterday on the I've done so much stuff this week I can't remember. Either the members only call or the Facebook Live. One of them, probably both. We're talking about this idea that people want to have a thesis basically and say, this is what I think is going to happen. And we call that a crystal ball. Most people would call that a thesis. This is what I think is going to happen. And when these things happen, it validates my thesis and all that. And I just kind of lump that into a crystal ball, whether you're bullish or bearish. And our idea is that we don't have a thesis of what we expect to happen. We respond to what actually does happen.
Right.
And it's a gigantic distinction.
Yeah.
And I just think it's human nature that you want to, I hear what you're saying, but what's going to happen tomorrow? Right. I mean, I do the same thing. I have what I think is going to happen, and I look for reasons why to validate it or not validate it. But at the end of the day, I'm making decisions on what actually happened and responding to that. And I'm sure we'll keep talking about it, but I don't know how else to put it. And it definitely frustrates people. So this week, I put this presentation together on Monday, and the market has tanked since then, right?
Right.
And the whole point of this, it's based on this video that came out, I guess it was on Monday, that Larry Williams did, he's a seasonality statistics basically expert. And he's been phenomenal. He's been in the market for 60 years. He's a genius, and he's really good. Is he always right? No.
Yeah. Nobody's always right.
Nobody's always right.
Yeah.
But we all get very frustrated when you're wrong. And you're wrong if you believe something's going to happen and it doesn't happen, and you've told everybody that this is what you believe, then you're wrong.
Yeah.
Right? So he put this video out. I think it was on Monday, might have been over the weekend. And it's based on this idea that the 12th trading day of the month in September almost always is a top, and then September has a big decline, and then that sets us up for a big bull rally in October, November, December. Okay? And so he bases his thesis on the history of what's happened on the 10-year cycle and then the 2-year within the 10-year cycle. Okay. So we're gonna kind of look at that, and I pulled my own charts for 9 of those years. So I did the last 5 individual years, and then I went back and did. So we can't do 2022 because obviously it's not done yet. But I did 2012, 2002, 1992, 1982. That's as far as I could go back. So we got 9 charts to look at, and we'll see whether or not how important the 12th trading day of the month was, and so this is just a statistical way of doing it as opposed to kind of the technical analysis way that we do it. But yeah, it frustrates people. Okay. So September, we've talked about this before, September is historically the worst month for stocks, right? The median decline over time back to 1928 has been a decline of 0.42% for the month, okay? It's been positive 44.7% of the time since 1928. So obviously, almost half the time, right, you're wrong. If you think that the market decline, if your thesis is that the median decline is 0.42%, so I'm going to be out of the market in September. Almost half of those times you'd be wrong. I mean, those are great odds in Vegas because you're a little bit more positive than you are negative, right? If you short the market, but almost half of those times you're going to be wrong. Okay, so then we're going to look at Larry Williams. Is going to be the primary piece, and then we'll look at the TSP fund charts. But before we get to that, I wanted to put up this, if somebody asks a question or has a comment, then 10 or 15 or 100 other people have the same question and comment, right? We know that that's true.
Yeah.
So here's a comment that I got this week on Facebook. Every day you can pick out articles that are completely opposite of each other in the media and online. I've noticed that most posts to play it safe always begin with, will it go up or will it go down, and always with a question mark rather than a firm statement. It's become clear crystal clear that nobody has a crystal ball. It's hard to compete with the algorithm traders. Technical analysis seems worthless in this manipulated market. Okay, so and below that was my response to the comment. The reason that I post the articles that I do is because I read a lot, right? And I watch a lot of videos, and I do research basically all day, and I post things that I think are valuable to people to come away with, right? It may not, I may not agree with what they say.
Right.
Like I said, most people have opinions of which way they think the market's going to go.
Yeah.
And I may or may not agree, but the people that I post have arguments that are valid, and they're professionals in the area.
Right.
And it's something for people to think about, and that's why I'm posting.
Yes, to generate discussion.
Right.
Right. Because if we always give you our opinion, even if it's with an article that is opinion, which I think sometimes there's some value in that, right? And usually what you'll do is you'll do it later in the comment section more than you'll do it in the original post.
Right.
I think. And that's probably what, catches some people off guard, but it's actually intentional, right? The whole point of social media, by the way, is interaction, right? Is engagement. If we just posted things with no engagement, there's less value in the whole conversation, right? And that's what the group is about is, for us, it's about getting people to discuss these things. Because if you're just kind of wandering by the comments and maybe you don't click on the article to read it, like, you're not engaging in the topic. So you're not learning.
Right.
And this is an educational service. And so if you think back to school, some folks haven't been to school in a long time or whatever, or if you did or didn't go to college, whatever, high school is kind of the similar. You have to engage to learn.
Yep.
If you just kind of passively sit there in class and glaze over, you're not learning anything.
Right.
So in our group, the whole point is, and you'll kind of like, here, let me just set this here,
right,
and see what people say, because you don't want to influence the conversation, right? And I think sometimes that gets missed. Is like, well, why don't you tell us what it is?
Right, that's the frustration.
Yeah, they want you to tell them.
And even if I certainly have an opinion about all the articles that I put out.
I know you do.
But my opinion, is as good as anybody else's. It doesn't mean
you're going to sway it, the discussion. If you give your, like, I'm kind of the opposite. Like, when I'll post things, I tend to put my opinion in the post, and that's just a different way to do it, right? But I think there's probably more value in the way you do it from a learning standpoint, because you're not trying to sway it, right? It's like a professor that puts something up for discussion and doesn't tell you what the right answer is or wrong answer is.
Right.
Because there may not be a right and wrong. There's not always black and white, right and wrong. There's probably, a better version, a more educated version of it, a more not educated, a more what's the word? Like, well-read version. Like, meaning, like you said, a lot of the people most of the people I've seen you ever post articles and things they're from credible sources, right? They're not some whack job. Like, they've been doing this a while, and you should listen to them. And that's also exposing people to those people, right? If it was only Jerry's words, there's not as much value there, right? And I like the fact that you'll put people out there, put topics out there that you might not necessarily, it's definitely outside of your methodology.
Right. That's just the whole Larry Williams thing we're going to do today. It's not it's not how I look at it.
But I hope what people take away from that is that we aren't closed-minded as like an organization.
Right.
Like, the way we approach all of this is more with like an eye for what's working, what works, what's dependable, what's repeatable. We work way more on probability than possibility. We want to know, hey, how can I get the most confident direction of the market, right? And really the only way to do that is to see what it's doing, right?
Yeah, right. The other way, like he does, and we're going to talk about it, another way is to look back and say, what has it done before under similar circumstances, and then with an expectation that that's what's going to happen going forward. And it may or may not be, it may or may not turn out that way. It doesn't mean it's wrong or right. It just means historically, if you flip a coin 9 times, what are the odds on the 10th time that it comes up heads or tails? It's still 50%, right?
Exactly.
So, okay.
Let's jump into it.
Yeah. Okay, so Larry Williams. If you go to stockcharts.com, he has a lot of videos up there, but this is his main site. It's ireallytrade.com.
I like that name.
Yeah.
I really do trade.
Yeah, he really does, and he's very good at it. But again, you know, he's not right, quote unquote, right every time. So in a business known for one-hit wonders, Williams has endured, passing the test of time. If there's one person who embodies the mind and spirit of the individual trader during an entire 40 years existence of futures trading they're talking about, it probably would be Larry Williams. That's from Futures magazine. So here's Larry Williams. Through good years and bad, he survived recording and teaching his market wisdom. He's a best-selling author, featured on Amazon. He's written a bunch of books, and they're all really good. You can definitely check them out on Amazon. Taught thousands to trade the markets. Has been the only futures trader in the world repeatedly to trade $1 million of his own money at seminars around the globe, right? So that says a lot. Talk about skin in the game. He's trading his own money, and he's telling you how he does it. He also
kind of sounds familiar.
Yeah, yeah. And from time to time, he ends up on Crazy Jim Cramer's show, which is great. So he's definitely out there in the public, and he's respected in the industry. Okay. So here was the screenshot of his presentation from earlier in the week. He says we go down, and then it's up, and away, right? So again, I put this together on Monday, and then on Tuesday the market crashes over 4%, and it's gone down ever since. It's going down now. I mean, we're recording this here on Friday morning. So when we get to the end, they're not gonna, the weekly numbers aren't gonna be exact for the end of the week. It'll be close, but even on Friday here, the market's still going down, right?
Yep.
So
but I always like to point out in the newsletter that we always get the full week.
Yeah.
And when you do that for the members, we don't, it's going to be the whole week.
Yeah, the newsletter will be the whole weekend. But he's been consistent so far in September. It's gone down, and according to his thesis, and which is historically based, that sets us up for a big move higher in October, November, December. Okay. So this is we've shown this chart before. I took it from one of his past videos at this is the stockcharts.com little icon. So I took it from Stock Charts, and it's the 2022 Decennial Pattern Roadmap, they called it. So they average the years ending in 2, right? So 2022. They average it back to 1952, right? So obviously 2022 isn't in the record books yet, so as far back as it goes is 2012. But if you average all those out, this is what the chart looks like, okay? So what tends to happen historically, on average, you get a low in here in June, July, August, right? That's what we got this year, right? We had a pretty tough first half of the year. We got a low. We had a recovery rally, which we saw, and we have September tanking. So far, it's been pretty close. And then by the end of September, on average, because on average, the very beginning of October, the market takes off, okay? So one really, really important thing to point out here with this low in September is significantly higher than the bottom that on average we get in the summer, okay? In our case right now, that's it's 3,600 basically on the S&P. And we were talking about how important the 3,900 level is, because when we get to it later, 3,900 is like right there, more or less. Actually, I would kind of argue it's really the bottom. So if we break the 3,900 level, which we are doing today, the market likely comes back down and tests this low. And if it does that, we are out of the pattern. And so, again, this is the average. It doesn't always happen this way. All right, but that's what the foundation of this whole thing comes from this chart, all right? So here's what he's saying. Selling trading day of the month, TDOM, that's what that is. So you're selling the 12th trading day of the month. In 2022, the 12th trading day of September is the 19th. It's Monday. Okay. So the idea is that the market goes down. So he wants to sell. So this chart shows you how successful you would have been if you sold the market. So you shorted the market, betted it was going to go down on the 12th trading day of the month, right? So he's trying to get his best probabilities of being successful, meaning he's going to make money on a trade. So each of these are the trading days of the month, okay? So if we go down to the 12th trading day of the month, that's it right there. And so I don't want to get into his whole strategy here. You get a $2,200 stop loss, and you're holding it for 2 days, and you're going to exit the position. And we don't know how much he's essentially betting on it, so it doesn't really matter. What matters is on the 12th trading day of the month, the net profit that he has here is almost $19,000, and that's better than at any other time in the month. Okay, so he's betting the market's going to go down on the 12th trading day of the month. And he's right, all trades, 24 of them, there's a 91.67% of being probable, of being profitable, okay? And the trades win 22 times out of all the trading days. So this is the best probability over time in the month of September. If you want to make money in a month that historically is going down, you bet on the 12th trading day of the month that the market's going to go down. Okay, that's the idea. All right, so that's what it looks like, by the numbers. So if we go back and look at it, how does it turn out on a chart? Okay, here's 2021. So here's last year. The arrows, as we go forward, the arrows are pointing to the 12th trading day of the month. Okay, so in this case, I guess we would call it successful, right? Because the thesis is that the market goes down in September and really begins to go down on the 12th trading day of the month. So continued down in September and then took off right at the beginning of October. And yep, we had another little dip in November, but it kept going through the rest of the year. Okay, so yes, September went down, Q4 went up, and it met historically the average, right? That was last year. 2020, big move down at the beginning of the month in September, but the 12th trading day of the month, still the market went down, right? And his objective is to make money. So he's not calling a top. He's not saying that, just because the market tanked here at the beginning of September doesn't invalidate this idea that on the 12th of September it's going to go down, right? Because he's only holding it for 2 days. In that example. And so, those 2 days, obviously he made a bunch of money that time. And so what happened, but for our purposes, we're looking at a bigger trend, right? So yes, the market continued down in September, definitely big rally into October, came back down, almost put in a new low, but then rallied for the rest of the year. So does the thesis hold that it comes down in September and then overall goes up in Q4? Yep, absolutely. Okay. How about 2019? In 2019, it was basically the very top. So he made a killing. If he had held it for more than those 2 days, market comes down right to the beginning of October, and Q4 goes up. 2019 was exactly the historical average, right? Okay. 2018, I would argue, was an abject failure, right? Here's the 12th trading day of the month. He expects it to go down. It actually goes up. Goes sideways, and then completely tanks into the fourth quarter. Okay, so complete failure of if you were betting on it, it completely went against you. All right. So those are the last, I got one more, 2017. All right, 2017. Again, not his idea wasn't, well, it's not his idea. It's just historically it wasn't horrible. We did have a little bit of a decline in September, right? From the 12th trading day of the month, because we had a big run up in the first half of September, then had a little bit of a decline, and then a huge rally into the fourth quarter, right? So in the last 5 years, more or less,
2 out of 3.
Yeah, I mean, it's not exact, but it fits in line with the overall chart, right? Okay. So the next couple we're going to do is the 2-year itself, right? So 2012, what did that look like? We had a top in September on the 12th trading day of the month. That's great. And then it continued down into the middle of November, right? So that, I mean, from a trading perspective, that doesn't work because we're supposed to be having this big rally in October, and obviously we didn't get that. And then it continued into November, and then we had a recovery rally, into December. So I would say that didn't work. 2022, same kind of thing. Yes, from the 12th trading day of the month down into the beginning of October, that definitely held. We had a rally in October and into November, and then it kind of failed into December. So not exact, but not horrible. 92, yep, in line with historical averages, come down into September, goes up Q4, pretty much fit exactly the historical pattern. And then 1982, kind of similar to one of the last ones we just looked at, came up in September from the 12th trading day, did decline a little bit, and then rallied into the fourth quarter. So the theory of it works. And it doesn't work every year. It doesn't work all the time, but the theory of it kind of works, right? It's a statistical seasonal approach. And so if it stays somewhat valid this year,
mm-hmm.
even though everybody right now, I mean, especially after this week, is extremely bearish.
Right.
Is there a reason to still mentally stay in the game? Because if you throw in the towel mentally now and you go, market's going down, everybody now is looking at 3,900, which we're breaking today, then 3,600, and then there's all kinds of reasons why it should go down to 2,250 for, I can make that argument all day. But until it does that,
mm-hmm.
We still have to seasonally look at it and say, okay, it is still possible that we get a recovery rally. And if we do, we just need to be prepared to take advantage of it. Because,
right.
These rallies in these bull markets don't happen all that often, and they're really fast when they do, as we all have seen so far in 2022.
Rallies in the bear market.
Yeah, rallies in the bear market.
Yeah.
Okay, so basically the takeaway from all this, so how effective is the selling on the 12th day? Essentially, from my count, 6 out of the 9 charts, it worked. And how consistently do we get a rally into October, going into Q4? 7 out of the 9 times, right? It's an extremely valuable historical analysis, and it's a great tool, but it's just one tool that can help us manage this September and into the fourth quarter. So the historical analysis is just that. It's historical. Your odds of success go up dramatically if you pair kind of this historical analysis with ongoing technical analysis like we do. So that's what we're going to do in the newsletter this weekend, is really kind of dive into how we combine the seasonal idea of it that Williams is doing and apply it to what's actually happening right now in terms of technical analysis. So if you're a subscriber to the site, you definitely want to watch that newsletter. If you're not, you guys know where to sign up to get it. Okay. Bonus chart, again, is gold. It's the third week in a row I did it, and I don't usually like to do that, but as I was thinking about it, it doesn't really matter that much that we do the same ticker symbol. What matters is kind of the value that we get out of it.
Absolutely.
Yeah. So last week, I told you guys this was the chart, and I bought gold based on this chart. And last week's base topic was risk management, and the reason I bought this, like I was talking about last week, we hit what is it, 158 or whatever this line is. I'm not sure exactly, but we have a lot of support, right, going back like 3 years at that level. And we were back down to it last week. And so the odds of getting support there on a historical basis are good, right? Because we got it all those previous times. And so if you buy it here, if it goes below that line, then something has changed in the big pattern. So you just sell it. But if you buy it, the odds are that it comes back up. If it, not the odds, yeah, the odds. It's the pattern. The pattern continues, right? So your risk reward is great, because if I buy it here, I'm only risking, because I'm going to get out of it if it closes down here because it broke the pattern. But if the pattern stays intact, you're in it to make some decent money, right? So that was last week. We flip forward to this week. I pulled this up on Friday morning. I can't remember what time that was, but so it's by the end of the day, it's going to be a little bit different. But I actually sold it on that day because it did come up, right? And then it rolled back over and broke that short-term trend. And I'm like, nope, I'm out, because we hit resistance there at 50 RSI, and that was good enough for me. I'm out. So I did get out of the position early this week, but from the learning point of this is that once it breaks below that trend line, that's your indication to get out, because the pattern is broken, right? This was the top from before COVID, right? It hit 159, almost 160. After COVID came up, clearly got support, right? Consolidated for several months along that 160 line, and then broke out. Okay, so this is a pretty solid line right there. Got up to a high here in April, came back down, tested that 160 line again, came up, came back down. You know, these aren't really tests of that line, but came down, tested that 160 line again, and then arguably broke out right there. Right? Which, not arguably, it did break out right there. But then it rolled over. And so once it clears, I mean, this is significant major support, you know. And once it breaks below that, the odds that it continues down increase greatly.
Yep.
So,
and you really get all that from just kind of one line,
right?
You know, so for my takeaway from things like that are, I don't need to have. It's nice to be able to have all those other indicators, but just that line alone, looking at that chart, you could make a pretty, you know, good educated decision on whether to be in or be out. Because there's just with that line, like you said, you've broken the trend. There's no reason to stay unless you're hoping.
Right. At that point, that's all you're doing. It'll come back. It'll come back.
It'll come back. And why? But why? Get out. you know?
Yeah.
And you can wait. And if it does come back and it goes back above that trend line, then it's a good reason to get back in.
Right. Yeah. That's just how I think you have to think about it. Okay. So TSP fund charts, if we mentally flip now to a weekly basis, right? So if you're only tracking your TSP on a weekly basis, again, this is of the close on Thursday. Friday is probably going to close a little bit lower. So what happened here? How important is this? As of Thursday's close, we have a really big engulfing candle, which means the market opened right there at about that 20-week moving average line at 40.72. That's where it opened on Monday. It went up a little bit, came all the way down to that 39.01 level. And we've talked about 3900 as being a really important support level. Got down there as of the close on Thursday, and it's gonna break it probably on Friday. So an engulfing candle is definitely a bearish sign, and there's no reason. And you know, as we always talk about, it's below that 20-week moving average line, and RSI is getting pushed back down. So no reason to be in the stock funds at this point, or C fund anyway. S fund, same kind of thing. We haven't got a full engulfing candle, but we're clearly below. Cannot get above that 50 line in RSI, and we're back below the 20-week moving average line. So no point in being in the S fund at that point. I fund had a really volatile week. Opened Monday way above last week's close, but then came all the way back down, and it's about even with last week's close as of Thursday's close. But RSI is definitely not looking good. We got basically a double bottom here on the I fund, and it looks like that's going to be the first fund that actually closes below the June low. So I would not be surprised to see the I fund down here somewhere in the pretty near future. F fund, There are a lot of people that are betting that the F fund is going to go higher. Bonds in general. There's a huge thesis out there that talks about really more long-term treasuries than corporate bonds, but the closest we can come to it in TSP is the AGG. And actually, that's not true. The G fund actually will gain in return as if this thesis kind of held that long-term treasuries are going to be the only place to go if the stock market completely tanks. So we'll have to see how it goes. So we were really oversold here on RSI. If price was to continue down to here somewhere, but RSI didn't continue lower, right? If RSI stays above this level, even as price comes down, that's really what you want to see to try to anticipate a bottom, right? Because the movement of this down move, the power behind it would be less than the power behind this down move. So that's the divergence that you kind of want to see. You want to see RSI increasing as price decreases, and then that's like the setup for it to move higher. We're not, and that's the same thing on all the stock funds, and I look at that all the time, and on different time frames to try to anticipate these bear market rallies. And you could see it here a little bit. You have a higher RSI than here. All right, here was the price was at this level, it came down to this level, so price is going down, RSI is going up, and we get that rally. Right, so that's kind of the idea of what you're looking at to try to anticipate these rallies. It's not an exact timing tool, and it doesn't always work, but it is pretty good. Okay.
Questions.
That is all I got. It's been one heck of a week.
If you have questions, put them in the comment section wherever you find the video, whether it's on Facebook, YouTube, wherever. If it's not a comment section, you can always just send us an email, support@growmytsp.com, and we'll help you get it figured out.
Yep.
So some really good questions here lately. I mean, or comments, comments/questions.
Yep.
It's good.
Definitely.
I like it when folks give us feedback.
Yeah, it helps. It helps us kind of know where people are at and whether or not we're getting the point across. Right. Helps me for sure.
Yeah. Any feedback is good feedback. If it's critical, that's fine. We got thick skin. But anyway, if you like the videos, share them with your friends. If you're interested in our newsletter, you know where to find us at growmytsp.com.
That's it.
All right. Hope you guys have a great week coming up, and we are out of here. Cue music.